All right, guys, a highlight today, and it's been volatile on this session, but helping you yourself time trades better by watching a different market. So the NASDAQ is a market, this is the ES, but the NASDAQ is a market that slips and slides a lot faster than the ES for obvious reasons. And so there was a moment where we were going to rally in the ES, and it might have been in here. But what had happened was you had a lot of strength from some Florida numbers that come in a little lower than the previous days. So market got excited about that. Well, there was a re-rally about to happen through the mid 50s. And what had happened, if you again trying to work on better timing by watching other markets is one way to do it. Understanding a pattern, though, pattern we talk about frequently is that of a head fake, and a head fake happens a lot. And if you understand that pattern, but you understand why that pattern works and why it changes opinions, you will be much better at predicting the next right side of the market. So you could see that the market has just back over here. Before we know any of this stuff, we know that all these swing highs are coming in at the same price here, there, and all a bunch of times in there. At some point, they're going to take it out, and that's fine. But if they don't continue and they take it out and then come back quick, that's gotta get you to open your eyes, whether you trade the NASDAQ or not. It shouldn't come right back this deep. And when it does, it usually calls the next right side, in this case, to be the downside. Now, not forever. And I think a lot of people get themselves stuck trying to predict too many beats out. Get good at trying to predict the first couple chapters of a book and then the next and then the next. Too many people pick up a book and try to figure out who did it after they read the first chapter. You got to just build out a case and tell yourself the story. So you get to just find the next right side. And this thing, I mean, this is a pretty substantial break of almost 30 NASDAQ points from here to here. What was interesting then is if you were bullish in the ES and you see this here, take your hand off the mouse. And that's what we said. Be careful, because this head fake, what it does, and I'll just go over this briefly, is a head fake creates longs, momentum longs, thinking it's going to go up, and away. It gets them stuck. They say, holy you know what, when it jumps back down. So what happens when longs say, when they look like this, they're sellers. And if you get a lot of longs that look like this, you get a lot of sellers. And that anytime you get a lot of sellers that look like this, especially with their eyes crossed, downside's probably the right side. The other thing that you get is you shake out shorts that might have been in here that get stopped out. So when you're short, you are a buyer. If you cover your short because it stops you out in there, you are not a buyer. So this whole sequence of a head fake has what? Less buyers plus more sellers. That's always the recipe that you need for the bread to rise or the market to break. Less buyers and more sellers. The price of anything has that combination. Prices are going to probably go down. So that was a head fake up to go down. Then what was interesting is this was the moment to say this pop was predictable in a way that you could create some probabilities where you had the market break like this, have a little bit of a consolidation. They look like they're going to run through all these swing lows back in here. Bam, they pop back up. Before they come all the way up here, because it's too late after it rallies a bunch, you could assume that that's a good probability. So if you're looking to get long the S&Ps, this could keep you from waiting. This could get you from jumping. Using another market and their patterns the right way. Not the patterns you read about in books, double tops and bottoms and head and shoulders. That's for retail. You want where you stick other people and get yourself in a position to see where the other side is bloodied. That's what's important in trading. And also remember this. Don't look to figure out who committed the crime in chapter 1 of the book. Just get good at trying to predict the end of that chapter, the end of that chapter, and then put everything together. And as you do that, you will feel more confident. You will start to address directly the fear and greed. You'll become more objective, and your guesses or your being right won't feel like good guesses. Luck will go away, and all of a sudden, at the end of the week, you built yourself a deck. If you watch a carpenter, looks like what they're doing is random until they're done. And that's what everybody's trying to do. A lot of people are doing it, and on different kind of parts of their journeys. Good luck, subscribe, and keep yourself safe.